Good morning, everybody. Happy Thursday. It's March 30th, 2023. Great to be with all of you today. That is the SDSU San Diego State Aztecs fight song. And I'm going to be out in Houston tomorrow at the Final Four for the weekend, and very, very excited that my San Diego State Aztecs, I'm an alumni, of course. I graduated in 1990, ages ago, finally made it to the Final Four. So it's going to be a very, very special time, a special weekend. I get to be with a lot of my older friends that I was with in college, and so it's just a very exciting time. But I'm bringing the Daily Bites to you today. I do plan on being there through Tuesday. So, of course, what'll I be doing? The Daily Bites from Houston on Monday. So hopefully, and it is if we win on Saturday, and I'm able to stay for the entire time for the finals. Finals are on Monday night. So anyway, let's talk about markets here right now. So it's been a really strong week for the markets. No question about it, right? We had a little bit of started seeing a little bit of a pullback earlier in the week, but as you can tell from this chart here, actually, let's take a look at another one here. So the SPX 500, obviously, showing some power the last couple of days. We tried to make a retreat on Tuesday, pulled back down to the moving averages and gapped higher. Now we have a huge gap in place here. Now, don't forget, above us, we do have another gap that needs to get filled, and that is up here at about 40.90, right? It hasn't been filled yet. So that would probably be a good target over the next couple of days if the market momentum continues, right? The one thing that looks good on this chart, of course, is the top pane, which is the relative strength, right? We see that right there. It's been moving sharply higher, making higher highs and higher lows. Went above that 50 line on the RSI, and now we're making a run up towards the 70% level. The one thing that might be of concern here, volume trends have been kind of low. Volatility has been down as well too, but some of the other indicators are still pointing towards maybe a little bit more upside to go. The upper Bollinger Band comes in at about 40.63, which is a little bit lower than the high of early March. Remember, we had those big two strong days at the beginning of March, right after just before the jobs report came out. 2 strong days, and then we hit that 20-day moving average and came back down, came below the 200 and rallied right back up. And again, we're making higher lows on the way up there. But now we see that this potentially yesterday is that breakout that we were looking for above the 50-day moving average and above that downtrend line. So if we get some follow through, and it looks like futures are up a little bit this morning with the S&P 500, ES up above, let's see here, 25 handles this morning. Dow Industrials up about 197. The NASDAQ up about 3.5%, getting over that 13,000 level, which was a big level that we've been looking at. VIX down a little bit this morning, VIX futures. So one thing that we need to be aware of is the calendar, right? So tomorrow being the last day of the month, last day of the quarter, is going to be a very important print on the monthly chart to see where we're at on the MACD. And I think the MACD is probably going to start turning its way back up if the market ends strong today and tomorrow. So next week is an interesting week. So if we get to an overbought reading in the next couple of days, we could pull back a little bit. But next Friday is Good Friday, and the markets are closed. It'll be a 3-day weekend for the markets, obviously, off close Friday and close Saturday, Sunday. But what's interesting is that the jobs report data will be coming out on Friday, and unless you trade futures, you can't do anything. You can't, unless buying something before Thursday that expires the following week or a couple weeks later, right? So you're really kind of helpless there for you're just going to be observing, just going to be watching things. So it'll be an interesting time next week. There's a little bit of jobs data coming out earlier in the week, of course, with ADP, JOLTS, and jobless claims, of course, and a couple of other pieces of data. But it's the job non-farm payroll report that comes out on Friday. Now today we had the GDP report and the PCE, and I didn't really get a look at what that came in at. Let's take a look together. It looks like GDP price index, or GDP, was revised down slightly. This is the second revision to 2.6 from 2.7. Pretty good for the fourth quarter. 3.9% on the price index is a little bit lower than the first reading, or the last quarter actually, and down a little bit on the price index, but still elevated. 3.9% is too hot. And then we also had jobless claims tick up a tiny bit. Prices for fourth quarter down to 3.7 from 4.3. That's a positive on the inflation front. Real consumer spending down sharply in the fourth quarter, which is interesting because that includes the holiday shopping area. So it looks like a mixed bag over here. We have Treasury Secretary Yellen speaking later on today. Richmond Fed Governor Barkin, Tom Barkin, speaking as well too a little bit later on, about 12:45 p.m. And then tomorrow we have the consumption and expenditures number for last month. So that's coming in for February, and that'll be an interesting number to take a look at as well. We'll get some sentiment readings along with that. So let's take a look at the markets for a bit here. Again, we saw the S&P 500 chart over here, but let's take a look at stocks above their 50-day moving average. And again, you know, the markets have made a lot of progress over the last couple of weeks, but still we have to remember that anything below in this box is no good. Now we're making a move above to the box, and you know how we respond when we get up there is going to be key. Forget about that 50-day moving average, which is over here. That could be a positive for stocks going forward. Now, the one index that we need to take a look at is the stocks above the 20-day moving average for the NASDAQ. Now check this one out. This one's you thought would be firing, right? So, you know, because the NASDAQ stocks have been really strong, but no, it is not. Let me put the box in there. It is not the NASDAQ in total that is in whole that is doing well. It is the top level of stocks, the Apples, the Amazons, the Google, Teslas, and so forth. These are the top stocks that are doing it. So there's a bit of a divergence going on here, isn't there? In the NASDAQ stocks, most of the stocks are not performing well. They're below their 50-day moving average, right? So I found this interesting that 38% of stocks that are above their 50-day moving average. Now remember, this is equal weighted when you look at these names. This is not cap weighted like the index is calculated. So you know, this is a few stocks doing really well, but the majority of them not doing well. So until this changes, if this moves up above the 50% line and starts making a run up here like it did in January and February, well, that's a different story, right? And then we can certainly upgrade this to be more bullish. I would rank this as neutral to slightly bearish still. I did notice that IBD, Investor Business Daily, went into market and confirmed uptrend yesterday, and they were just looking for that stock market to move above the 50-day moving average. And again, we saw that over here, right? The blue line over here is the 50-day moving average, move above there. And lastly, the last chart I want to show you is the NIMOT, which is the McClellan oscillator, not ratio adjusted, but you know, we're at 140 right now. This is pretty overbought, and if we open up here where we're at right now, we're still up 26 handles on the S&P 500. This is going to go up up towards 200. Okay, that is an overbought reading. That's not anything you want to be into buying and start opening up positions. You want to be selling into an overbought condition. Now, here's the NASDAQ. which again is reflective of the whole index itself, not just a few stocks that are doing well. And we notice that the NASDAQ oscillator is only at 84. Even though the NASDAQ has been the strongest index of them all for lately, especially in 2023, and somebody came out and said, oh, well, since the December low, the NASDAQ is up 20%, so it's in a bull market right now. No, it's not. It's not a bull market. It's in a bull market when you get more stocks that are trading above their 50-day moving average. You get a momentum here that pushes into an overbought reading. Look at how it compares to back in January. Back in January, when this thing was really firing, okay, we were up to 400, right? 400 on the McClellan oscillator. And even in early February, we're up at 250, and we're only up at 84 right now. So it tells you that the breadth of the NASDAQ is not nearly as good as the rest of the market right now. And that's a telling sign. Remember something. A rising tide lifts all boats. So if the rest of the NASDAQ decides to come along board with the bigger NASDAQ names and the Russell 2000 for that matter, we'll see a lot of these things improve, these indicators improve. But for now, you have to call it for what it is and not anticipate where it's going to go. I did want to show you, leave you with a couple of other stocks that I'm looking at here. This is a name that I have played in the past and done fairly well with. I do have some stock in this one. This is Gilead. It came down sharply from the high 80s from earlier in the year, and looks like it made a low over here, and it's making a good run over here. And this is the stock that I'm looking at buying some longer term calls on it, maybe out to May or June. They had really strong earnings back in February, and you can see that popped up over here. And made a run up to 87 and stalled out here. But I do think that this stock has got some legs to it. Another one that I have on my radar screen is an old favorite, Walmart. Again, this is kind of making higher highs and higher lows on the chart. You can see that right here, and it's making a really nice move. In fact, relative strength following it as well too, doing as well, if not better than the rest of the market. Indicators are strong. Volume trends are positive as well too. I'll be looking to buy some calls on this one in the coming days. I'm not all that excited about buying anything right now, as the markets are pretty overbought just after the last couple of days. And as I showed you on the oscillators, very overbought on those at some point in time today. Amazon's also got my interest here. It's made a move over $100. Again, I did buy some Intel yesterday, and that made a fabulous move. Also on some really strong turnover too. So best volume it's had since the latter part of January, when it dropped after earnings came out. So this is another one that I have on. I picked up and added on and put on my radar screen. And again, the other one was Amazon. I'm just showing you that one. And you can see it's a little bit choppy right now, but it's certainly trying to carve out a cup and handle pattern. You can kind of see that. Let me annotate that for you. You can see that here. And there's your cup and handle pattern here. And if it breaks above that 101, probably going to make a run towards that 200-day moving average again. It's bending down. We do have a cup and handle pattern here in the relative strength, and MACD is starting to improve as well too. And volume trends are starting to get better. Yesterday was an accumulation day, even though it's a little bit lower volume. So this might be one to take a look at for some June, maybe some June calls. So I'm looking at this one as well. So I think it's going to be it. I'm going to wrap it up, and thank you everyone for spending a little bit of time with me this morning, and wish me luck, and wish the Aztecs luck this weekend. And we're going to hopefully get a good showing this weekend with a lot of people there, a lot of fans. And I'll see you guys on Monday morning. Have a great day. Trade well and take it easy. Don't take it slow. Talk to you later. Bye.